A new financial crisis has developed recently in America, and the trail of destruction it could leave behind will look nothing like what you might expect. In fact, I believe nearly 40% of the elite, publicly traded companies, brands you've known and used your whole life, could go bankrupt because of a strange market event I call the flipping, wiping out thousands of investors' fortunes. I just finished writing a brand new report explaining exactly what the flipping is and how billionaires are already profiting from this big event, and what you should be doing to prepare as well. To get a copy of my new free report with all the details, simply go to McCallFreeReport.com. Again, that's McCallFreeReport.com for a free copy of my new report. Welcome to Making Money. This is Matt McCall. Thanks for joining me. It's Thursday, August 25th, 2022. Again, another beautiful day down here in Nicaragua. But I will say this is a very, very special show. Two amazing guests coming on with me right now. Kevin Leary, Mr. Wonderful, as you know, from Shark Tank and many other things. And Ben Samaroo coming on. He is the CEO of WonderFi, a publicly traded company up in Canada. They're going to be coming on. They're going to be talking about everything from inflation to Bitcoin, to where they see the future going. Is regulation good for this industry? Yes or no? You may be surprised by the answer when both Kevin and Ben give that. And then, of course, we talk about the one investment that they want on their island for the next 10 years. Also, bringing them on because I'm going to see them in a few weeks out at the Wynn in Las Vegas for the Web3 Expo. Both Kevin, myself, and Ben will all be speaking at that. You can come and join us. We have a great discount for you. You can click on right now up on the site here and take you to it and log in, get your ticket, and can come see us October 10th through 13th at the Wynn in Las Vegas for the Web3 Expo. So coming up right now, we have both these amazing, very smart gentlemen talking again about inflation, the market, crypto, where the world's going. Coming up right now on Making Money. So I'll give you a little bit about Kevin. He is the chairman of the O'Leary Funds and the manager of the publicly traded family of O'Leary Global Equity and Income Funds. He's also on the board of the Richard Ivey School of Business at the University of Western Ontario. And of course, he's also the investor and host of ABC Television's Emmy Award-winning venture capital reality program, Shark Tank, produced by Mark Burnett, Sony, and ABC. And then we have on as well, we have on Ben Samaroo. He is also an entrepreneur. He's an executive advisory experience in both private and public companies in both fintech, blockchain, digital assets. He was formerly an executive officer at First Coin Capital. That's a cryptocurrency startup acquired by Galaxy Digital and served on the Galaxy Digital leadership team. He serves as the advisor to the British Columbia Securities Commission on the FinTech Advisory Forum and to FinTrack on virtual currencies. He has his Juris Doctorate and Bachelor of Commerce from the University of Alberta. Without further ado, joining Making Money right now, Kevin O'Leary and Ben Samaroo. Thank you so much for joining us. So let's get into kind of the hot topic here right now before we have a lot to talk about, whether it be markets, whether it be crypto, the future of crypto. But inflation still is the hot topic. On Friday, obviously, we have Jerome Powell speaking up at Jackson Hole. A lot of concerns right now that is going to be a very hawkish speech that he will give. And we're seeing, some expectations really tie in. Gentlemen, I saw a stat earlier this week that showed that the hedge funds are net short the S&P 500 the most since June 2020, basically at the bottom of the COVID crisis. That's showing that really they believe that Powell's going to come out extremely hawkish. Where do you guys stand on inflation right now?
I'm in the camp that likes to have hedge funds short. That's particularly if that's the consensus, that's extremely bullish for markets. Obviously, they have to cover. If you look at hedge funds as an index, they're wrong 50% of the time, and you'd expect that. Different strategies, obviously, but the added bonus about hedge funds and why they can add a lot of volatility, and sometimes to the upside, is many of them use 3 to 7 times leverage. So when they're wrong, they're really wrong. And obviously, that's even been exacerbated in the crypto market, where we've seen lots of leverage blow up all kinds of different business models, which I consider very healthy. So the reason that it's been difficult to really call the bottom in the market or time the market, if you weren't participating in it during the 5 weeks of trading in July and August, you've missed all the gains this year. And they were unanticipated gains when the market decided that the economy was much stronger than people gave it credit for, and that consumers, still awash in $6 trillion worth of free printed cash, are still spending. So where we go next is a huge debate. It's whether it's 50 basis points or 75, it's one of the above. And then probably one more hike after that. And then we'll have to see what the Fed does. But all of this is baked into the market, and earnings in the last quarter have been much better than anticipated. So everybody's been confounded by the economy, by the market, and even crypto.
Yeah, that's a great answer. I have to agree 100% with you, Kevin, that, you look at the times over the past 15 years that the hedge funds have been extremely short. The market tends to bottom within a month or two on either direction of that. So, they tend to be extremely wrong. And when that short covering happens, it happens fast. We saw it, after the COVID bottom. What's your take on this, Ben?
I mean, I think Kevin put it pretty well. I don't have much to add on that point. I do think that the point about how that ties into the crypto market is really interesting too. I think we've seen some really, interesting developments over the last few months with some of the crypto lenders and what's happened there. I think that's definitely a major, it's a major sort of point of impact in the development of adoption of crypto and regulation of crypto. And so, I kind of look at what's happening in the more general markets, relative to how that impacts crypto, because obviously that's my area of focus. But I think that it's really created some interesting developments that we're seeing having ripple effects in the crypto markets right now.
So speaking of ripple effects, the correlation between the tech stocks and crypto, and Bitcoin in particular, were very much hand in hand there for a while. Earlier this year, it's starting to kind of loosen up a little bit. Do you see that correlation where crypto can be an asset class that really does create diversification within a portfolio that may be a little heavily weighted towards technology stocks?
Crypto is not yet a real asset class because it hasn't been regulated yet. So for all the excitement about it, and one of the reasons I'm long, certainly WonderFi stock and 32 different crypto projects, is that I believe over the next 2 to 3 years, we will get regulation. And then finally, we can get institutional participation. People forget that 70% of the world's wealth is tied up in pension and sovereign wealth funds. And so if they're not allowed to buy the asset class, there's no underlying bid. And that's one of the reasons we can't get crypto past $24,000. It's really hard because there's not really a large constituency that's permitted to buy it yet, particularly Bitcoin and Ethereum and even USDC, probably the three most popular right now. And so if we do get regulation first, it'll probably happen in stablecoins because that's been very volatile lately, and there is policy on the table in the Hill, bipartisan policy that's being contemplated as early as next September, which is not far away, just weeks to be looked at. And if not, it'll be after the midterms, but that's coming first. And then, of course, it'll be on to Bitcoin and others, whether they're allowed in an ETF. But that's the upside. That's why you participate. But to say that, it's a real asset class, it's not there yet. It's still nascent. It's tiny, but it doesn't mean you shouldn't invest. You should be ahead of when it's finally made a real asset class because its price will materially appreciate. That's my investment thesis.
It's a good point. Ben, you want to comment on that?
Yeah, I think it's also interesting to look at the crypto market and adoption of crypto relative to public markets. I think since 2016, 2017, we've seen Bitcoin miners evolve as a very specific sector of crypto in the public markets. That really was the first subcategory with companies like Hut 8 and Hive. And that's become a sort of subsector of the crypto industry that is really well understood by investors. And I think it's been, it's paved the way for more investment into the crypto industry. It's just really allowed people from traditional, mining and oil and gas, et cetera, investors to be able to flock into investing in crypto and supporting the industry. So I think that's really interesting. Now we're definitely seeing some other sectors, subsectors evolve in the public markets, which again, obviously always ties to significant inflow of capital. So we have sort of the institutional side, which is Galaxy Digital and Mike Novograt's firm, which is really, focused on serving institutional clients, which I think is also extremely important as we see, major financial institutions getting into the crypto industry like Fidelity and BlackRock. And then on the trading platform side, which is where WonderFi comes in, that's another subsector that is being carved out. And as that develops further, which we need competition for, we need more regulated companies that are providing safe, secure access to crypto to people in the public markets. As that sector develops, I think that's going to continue to support adoption and kind of help investors understand more clearly what the differences are in these various investments that they're making in the crypto space.
So you mentioned competition slightly there. What is some of WonderFi's competition right now? Is there a publicly traded companies that you see as competition, some startups that are coming up? How do you see the space evolving over time?
So what we're focused on is providing compliant access to crypto. And so that's something that is harder to do than you think. It sounds simple. Obviously, there's banks and other financial institutions that have been providing regulated access to financial products for hundreds of years. The crypto industry is a lot newer, and so it's taken regulators longer to understand the business models and the risks. What we've done is really invested in working with the regulators and getting these licenses from the securities regulators that allow us to operate in certain jurisdictions. So Canada is the first one. We own the first crypto marketplace license in the country, and then we just acquired another one. We see a lot of value in that because not only does it provide users with that comfort that there is oversight on the company and there's the proper policies and procedures and insurance and backstops in place, it also provides investors with that comfort as well. And so we see that as a big differentiator, and we're continuing to invest in that area. So, but in terms of publicly traded companies, so we're the only company that's listed on the TSX, which is the senior board in Canada, that is a crypto trading platform. There was one other one, Voyager Digital, which was recently delisted, and they're going through a Chapter 11 right now. So that was a company that was caught up in the crypto liquidity crisis, that really related to this kind of over leveraging and lending client assets. And so everything that's transpired there has definitely really kind of reaffirmed our thesis, and we're doubling down on investing in this regulated access. So from a competition standpoint, I think in the public markets we're pretty unique. I don't think there's anything else like WonderFi that owns and operates these licenses, and we're continuing to expand in other jurisdictions. But more broadly, there's definitely the major global players, the FTXs, the Binances, the Coinbases that that serve as competition to us.
Do any of you gentlemen want to comment on Voyager? Because obviously, a Canadian company that got caught up in liquidity, as you mentioned, Ben. And do you have any type of exposure to anything like that as well?
So well, I can take that first, just on the.
Sure, go ahead.
Go ahead, Kevin.
Well, I was just going to say, from the context of an investor, not any one specific blow up, but over the last 90 days, we've had catastrophic failure in all kinds of different business models, from stablecoin to platforms that do lending. I mean, this is actually a good thing from this perspective. I mean, what's occurring here is the experimental business models, or what I would call, without showing any disrespect when I say this, but just idiot management teams that have never had any experience with leverage, because leverage has destroyed platforms long before crypto, whether it was stocks or bonds or real estate. If you don't understand what you're doing with leverage, you get wiped out, and you should get wiped out. And it's a very important learning experience for the market, and it scrapes the patina of idiot management out of the ecosystem, and it leaves the remaining companies much stronger. And that's the important part. When a Luna gets wiped out, an algorithmic stablecoin, it's a good thing. Now, yes, you have to sacrifice the company, and you have to sacrifice some shareholders, but it's for the greater good of this nascent industry. And so everybody learns the hard way when you deal with idiot management. And idiot management, it's like a Darwinian force. The market scrapes them out of the system. They have a very hard time coming back, and nobody will capitalize them. And that's great. And I think we're probably in the third inning of that. And the remaining companies are far better off. There's much more to acquire. There's assets out there that are very inexpensive. There's a consolidation going on. And the majority of survivors are much better at managing their situation. So, agnostic to the next thing that blows up, and I'm sure there'll be more, my attitude is, who cares? This is great news.
Yeah, it makes sense. I mean, any emerging technology or innovation will have everybody jump in, and you're going to have players that don't make it. I mean, it's like I said, it's Darwinism, survival of the fittest. It's the market, and it kind of reassures to me how big this potentially could be, honestly. And again, if you make it through, how much more powerful and how much more the bigger the gains possibly could be for investors in this. So you want to comment on that, Ben?
Yeah, I agree with both of you. I think it's natural, a natural part of evolution of new technology. And I think if you zoom out another 5 or 10 years looking at the crypto industry, there've really been two major events that have shown major market learnings and then also have fed into regulation. And so the first one, going back to, I guess this dates back to sort of 2015 to 2017, but this was crypto exchanges that were where all of the customer assets basically were controlled by one founder, the person that had owned all the keys, all the assets. And so we've obviously seen that in so many different instances. I think Quadriga is probably the best publicized, given that there's a Netflix documentary about it. But that's hundreds of millions of dollars of client assets that were, at the disposal of one person. So obviously makes no sense. In hindsight, it's ridiculous, but there was a lot of euphoria around trading crypto back in 2015 to 2017 because of the big movements in Bitcoin price. So people just, I was a part of that as a user for sure, where you just wanted to get your funds onto an exchange so you could buy Bitcoin because the price was just going like this. And over time, you start to see that, not all of these platforms are safe to operate on. And then regulation came in. It took quite a while. Like we got the first, regulatory license in Canada for a crypto trading platform in 2021. And a lot of these incidents happened, 4 or 5 years prior to that. So it takes a while for that to sort of catch up. But that's a big learning for users and for the industry. And then now with the crypto liquidity crisis, if you look back over the last 18 months, everybody was really excited about earning yield on their Bitcoin or on different crypto assets, and those numbers never made sense. And I can tell you, as somebody who operates a crypto company, lots of questions from users and from investors. Why aren't you guys offering 20% yield on this coin because this other platform is? And those were difficult conversations to have because they could just take their assets and go to another platform. And so we just sort of stayed steadfast there. And the thing is, I like to say that the credit really is due to the regulators, really. I mean, because since we went the regulated route, for us to be able to offer those products, those lending products where people are earning these percentage yields, we actually had to go to the regulators and say, this is what we want to do. This is what the model looks like. These are the risks. And of course they say no, because they can see how much exposure there is for customers and for the investing public. So we just couldn't do it. And so with what's happened with Voyager and Celsius and BlockFi and others, the regulation is going to come in to prevent this from ever happening again. I can say that with 100% certainty, as I know the regulators in North America and elsewhere are actively working on this. So I think this is the next sort of major development in the market, and like you said, the market learns, and this is a part of the evolution of that.
To use Kevin's word, idiotic management, you kind of need some idiots out there to get a little bit of regulation in to get them out of the way. Like you kind of want to see these bad mistakes. I remember seeing, lend your coins, you get 25%. In what world do you think that's normal? Like what investor that actually does their due diligence thinks that's actually okay? That you're really going to get 25% risk-free? Not risk-free, but kind of presented that way. It's crazy.
Yeah, I agree, and I think it's easy to get caught up in that as well, because I think with some of these companies, the growth trajectory that they were seeing was like you've never seen before, right? So I think, though, again, it doesn't justify those decisions. I'm totally with you, but looking back on it, you can sort of see the track record of growth and how that sort of those emotions sort of tie into that, and not kind of thinking about how do we make this a long-term sustainable company and serve our users. Because the position that we're in is definitely, it's slower growth, but we believe we'll be here in 10 years and 15 years and 20 years, serving customers. And I would much rather have that than, see 2,000% growth over 12 months and then but risk jeopardize the company. So I'm totally with you on that.
I think it's important. You made a good observation that in the case of Luna, which got a lot of press globally, it was important for that to blow up, because it actually got some focus within Washington, D.C. on a bipartisan basis on legislation just for stablecoins as payment systems. And so the idea that we can get one bill to actually regulate the entire crypto ecosphere is not realistic, and that's not going to happen. You think about the broad spectrum from NFTs to tokens to various projects, and I always get people to remember when I can is to say to them, Bitcoin is not a coin, it's software. Ethereum software, Solana software, Polygon software. These are software projects. Will eventually prove out their merit, or they won't, based on the economics of revenue at some point and all the applications that sit on top of these. So they'll either win because they're good technology, or they won't. And so if you're a venture investor, as I am, you want to take a lot of positions because you don't have certainty in what outcomes are going to occur. You need diversity. But in the case of stablecoin, the opportunity, which is so interesting, is that a stablecoin backed by the US dollar and treasury bills, for example, no different than a money market account, would overnight, if it was passed and regulated, let's just take USDC by Circle, for example, and it was actually regulated as a payment system, that would create a standard of payment backed by the US dollar globally. And what politician, regardless of what state they're in, doesn't want that? It secures a place for the American dollar beyond just commodities of oil and iron and other payment systems that are built around commodities that are always backed by the US dollar. But that legislation is very simple. It's 5 pages in some of the bills by Haggerty and Toomey that simply says, look, we audit it every 30 days. We make sure that nothing that's supporting the token is a duration longer than 12 months. And we have total transparency in these audits. Now, not every stablecoin is going to survive the transparent audit, but that's okay. There's enough of them that will, or be started that will. And then we let companies compete, just like there's a money market fund at Fidelity and there's one at Schwab and other firms. That's great, but they're basically all the same because they're FDIC insured and they're regulated. Same thing with stablecoins. So I think that may come first. And what really was the stimulus for that, the impetus, was the Luna explosion, which was very diversified. So, it wasn't just shareholders or token holders in the United States. That blew up all around the world in a spectacular supernova. And now it's obviously disfavors algorithmic-based or stable coins. They will not be popular because people have been burned. And that, too, is a good thing. So you have to applaud the sacrifice of the Luna token holders and how their DNA and their ashes have probably created something of greater value for the next version of regulated stablecoins. And again, we applaud them, we thank them, and they too will not invest in stupid managers. And all of this is great stuff. It's all good.
That's great. You mentioned Pat Toomey. He was one of my first bosses. I was a bartender, and he owned a bar in Allentown, Pennsylvania, before we ran for Senate or anything. Great guy. And I remember we used to talk finance. I was a finance major. We talked finance back then, way before, obviously, cryptos were even thought of. But it's funny you mentioned his name with that bill with Haggerty. Let's talk about cycles here real quick. A lot of people who follow technicals, say Bitcoin, cryptos move in these certain cycles. We've really been between 20,000 and 25,000, give or take, in this zone. And you talked about it, Kevin, it'd be tough to break above 24,000 until that regulation potentially comes in for Bitcoin. But we do have a big event coming up in September for Ethereum, obviously number 2 out there. Do you see any type of catalyst between now and, let's say, I'm not a short-term guy, me in the end of 2023 or so, that could be that catalyst to get Ethereum, Bitcoin, and the broader market to really get the next leg higher?
Well, first of all, the merge has been forecasted to occur for 4 years in a row now. So for all the excitement, I'll believe it when I see it. There's a lot of people that are dissuaded from doing this in the Ethereum mining business. So they're not that excited about it. So you've got, an inconsistent harmony occurring. Now anything could happen. But really at the end of the day, ETH it's slow and it's expensive. And so if it doesn't fix itself, it's going to have lots and lots of competition. And so everybody has an opinion on this. And I think the market is being the market. I have a pretty big ETH position as well. I'm going to wait and see what happens because it has attracted more applications, more usage than anything else to date. But that doesn't mean it's fixed in stone. Anything could happen. And so I also think that there's other applications from HBAR to Solana, Polygon, all kinds of different ideas in terms of how this should happen and how financial services work and the cost, the speed, the fees, the transparency, auditability, security, all of these things. And I tell people, look, if you want exposure, have at least 7 or 8 positions on these projects because you just don't know. You can do it by order of market capitalization. That's easy to find out. But that doesn't mean you're right at doing that either. So diversification on this very nascent system, and whether where it all fits, and when people tell you, well, I know with certainty this particular level 2 is going to really work, they have no idea. It's the adoption by users of apps and applications on top of it, and payment systems and transparency and all the rest I mentioned that will eventually determine whether that platform is profitable or it isn't. At the end of the day, if it never makes any money, it's going to zero like every other business. And many will go to zero. And that too is okay.
So real quick, before you answer, Ben, Kevin, real quick, you said many of these will go to zero. So do you picture this, let's say at the end of the decade, 2030, going from how many thousands of coins now to something in a ballpark of 300 or 400 that, a lot of these small ones will go by the wayside? Or is it something that this will continue to grow in the small micro cap, if you want to compare it to the stock market, will hang around?
I think there'll always be, opportunistic token creation and trying to define it, whether you're playing a game or whether you're using it to buy something in the metaverse. There's so many different use cases being tabled. But in the end, when you look at most markets, what you find is it's the adoption of standardization that creates value. So if all of a sudden there's 10 stable coins that come to market for payment systems, my prediction would be that there'll only be 3 survivors 10 years later. And they'll be behemoths, they'll be very large, and they may have slightly different attributes. But, there's already 64 billion in Tether and 54 billion in USDC. They're likely to survive, assuming they can survive audit, and then maybe a few others. And always the rumor of the feds themselves creating their own digital dollar. I'm very skeptical of that. The last place you want development work done is with the government. They're the worst at it. So I'd let the private sector figure that out and just the government provide regulation. But, everybody's speculating on this stuff. The one constant that I would remind everybody to think about in why the use case for investing in this sector, and I personally believe over the next decade, crypto will be the 12th sector of the S&P. And the reason I believe that is when I teach graduating cohorts of engineers, I don't care what college you do it at. You can go to MIT, Harvard, you can go to Waterloo in Canada, or Temple, Notre Dame, you name it. A third of the graduating class, the smartest hands above keyboards in the world, because some of these classes are 1/3 international, particularly MIT. They have no interest in, as engineers, to go back to the other 11 sectors of the economy. Zero interest in working there. They all want to work on the blockchain. So my argument is you can't take that much intellectual capital, the best and the brightest, put them onto this sector by the tens of thousands every week and not expect incredible outcomes. So it's just like at the beginning of the internet, and all of a sudden when people thought, oh, the internet's not going to be anything, look at it today. It's the backbone of every economy. The same thing I think will happen in crypto just by the amount of intellectual talent. So it seems pretty stupid to me to invite international students from geographies that are very advanced in crypto and then kick them out of the country after they're educated. It's very stupid. And that policy should be fixed. Even the brightest, look at it, Sam Bankman-Fried. I mean, a 30-year-old, 22 billionaire. He is an American citizen whose parents are compliance lawyers at Stanford. And even he doesn't operate in the United States because he has no policy and regulation and backbone to work with. So all of that money and that intellectual capital that he is gathering on the Caribbean islands should be stateside, but it's not. So we have to get some policy into this sector, or we'll continue to lose the country's brain trust in this nascent sector.
But Ben, I'll put this towards you. I agree 1,000% what you're saying, Kevin. But you look at and I'm going to bring this in, I'm going to get grief for it, but the age and of a lot of the politicians in the United States, they trying to explain crypto to Nancy Pelosi wouldn't be the easiest thing in my mind, I don't think, for them to understand that. So how can we expect the government to get behind this when, they're, way behind in their own? Like, it seems like it's going to be a very big disconnect to get them to understand this enough to actually pass true regulation.
Maybe 2 years ago, but not anymore. There's just too much capital coming into this market. So you have, the Loomis bill, which is a very broad bill. It contemplates all kinds of different crypto. Gilderbrandt's backing her. So you've got both a Republican and a Democrat working together there. There are other initiatives going on. I'm spending a fair amount of my time on the Hill these days meeting. I'm not the only private citizen doing that. We want policy, particularly those of us that work in financial services, because we think it unlocks the power of the institutional investors' interest in crypto. And so we need the policy to get there. I'm going to predict that crypto, and particularly Bitcoin, will be locked between $20,000 and $25,000 until we get policy. It's just not going to go anywhere because there's not enough buyers. You need to untap the trillions of dollars being managed by sovereign wealth, and they're not going to buy Bitcoin until there's regulation.
Yep. Ben, you want to throw anything in there?
Yeah, so I mean, lots of comment on. I think moving back to the question about catalysts before the ETH merge. I mean, that also ties in, I think, with the current conversation. But the talent flocking into the industry, like Kevin pointed out, is very important. Personally, I've been in the industry for 6 years and have never seen this level of interest from people with super not even just out of university, like Kevin mentioned, but people from the major tech companies globally, financial institutions, investment banks, just all across the board. There's so many people that are just 1 foot in, 1 foot out, looking for the right opportunity to come into crypto, or they've already made the jump. So that also helps to create the bridge between traditional finance and crypto, which is really key. And that's, I think, another potential catalyst, or something that we are seeing, is just continued, I'll say institutional adoption, but it's really just institutional involvement. And that is firms like BlackRock, making big steps, Fidelity. And I think, you're not just seeing financial institutions provide custody and access for institutional clients, but it's also on the retail side. So you've got a lot of conversations happening, traditional banks, credit unions, financial institutions looking for ways to offer their millions of customers access to crypto. And so that's going to be another major catalyst when you start to see that happening on a meaningful scale. So all those things are really coming together, and aside from institutions making bets from an investment standpoint in terms of where they place their capital, it's really getting involved in the ecosystem and working more closely with companies like ours to help bring custody and access to their institutional and retail customers.
Yeah, I'll say I want to follow up on that real quick, because it's kind of mixed between institutional and retail. I used to have an RIA I sold last year for 17 years, an investment advisory firm here in the States. And for the last couple of years, I've been speaking to groups of very large investment advisory firms trying to help introduce cryptos to them. And you meet with these people, they're managing billions of dollars, and they don't have the first idea of how to get their clients' money invested in cryptos and what to do. They don't know what blockchain is. They can't have the conversation with their clients. I mean, just think about that on top of the institutional and just the regular retail clients, that kind of in the middle there, the opportunity of when these advisors start to actually be educated on it and have good conversations with their clients and give them an easy way to gain access to cryptos, how much more money comes into the market at that point.
Well, they're not going to learn about it while it's non-compliant. They're not even allowed to contemplate it into the models. I do a lot of business with financial services companies with more traditional products such as ETFs and indexed equities, et cetera. We have this conversation all the time. They're not going to spend an ounce of time worrying about it until they get instruction that they're permitted to index it. And so we're a very long way from that. And so their own clients are calling them saying, look, we'd like to, put 3% into Bitcoin, but they have no way of putting that on the balance sheet of the compliant platform for any of these firms. There's no infrastructure to do that. Bitcoin trades 24/7. The majority of their positions finish trading at 4 o'clock. There's a mark to market with the compliance infrastructure to make sure they're not offside on whatever the mandate is. That's been around for decades, but there's no infrastructure for compliant crypto. So we're a long, long way from that happening. And so most of the people that own Bitcoin are high net worth individuals, family offices, hedge funds, and minor institutional clients, very minor. And so that's the opportunity, though. That's the upside. The whole idea is that if you think it's eventually going to get regulated, all of those other players will come in, and then all of a sudden there's going to be 1 to 3% allocation in the typical portfolio, which is no different than a fixed income or bond portfolio or equity portfolio. And that's when this industry will begin to mature. And then also companies will build the financial infrastructure to actually be compliant in crypto with the reporting, whether it be capital gains and losses or some kind of, lending program where there's an income to it, or staking. All of that has to get worked out, but just zero compliance platforms. And so it's really hard to do that right now. And so that's why, for all the enthusiasm about Bitcoin, virtually nobody owns it.
Yeah. So Ben, what are you, looking ahead? I know WonderFi, you guys, I think, deal with NFTs and some, looking toward Web3 going into the future. Well, how do you see the industry kind of embracing that? Obviously, NFTs were hot a year ago, cooled down quite a bit, to put it mildly. Is that something that's here to stay, or is that one of those situations where, again, everybody got into it, 95% fail, and then we're going to have the 5% that come out on the other side?
Mm-hmm. Yeah, so I think on the decentralized finance side, I do think that that's something that has held up well. Many different metrics to look at, but I think long term, being able to have trustless transactions peer to peer is something that will hold true. And going back to this crypto liquidity crisis, I think there's that's actually a perfect example of somewhere that some of the decentralized lending protocols, didn't face those issues, and there's more transparency around how lending is actually happening. So I think that's, case in point of why, why DeFi can offer a lot of, safety, security, transparency to the general public. So I think that you're going to continue to see, capital flow into DeFi, and also regulation is going to start to happen there. We're having conversations with regulators on our DeFi platform, and I think that's going to help provide more comfort and safety for users as things move forward. On the NFT side, actually, I'll probably leave Kevin to comment on that. I think he's got some really interesting thoughts around what the uses are, what the true use of NFTs are after we've seen the kind of meltdown over the last year or so.
Yeah, NFTs are interesting because there's many use cases for them. Obviously, the idea of a JPEG of an ape or whatever else, that's interesting and very speculative. I don't see the long-term value of that, but that's okay. A market's a market. It doesn't matter what I think. It matters what the market thinks. It's not something I put on a balance sheet and think will appreciate over time. I'm more interested in authenticating hard world assets with NFTs, whether that be real estate, cars, pens, watches, jewelry, collectibles. There's a lot of use case for that and a lot of utility value in that. And I think in the metaverse, if it unfolds the way a lot of people are thinking about, NFTs will be a major part of the currency for transactions. So there's a lot of work to be done there. Most firms that have attempted to monetize it have had a very, very difficult time due to the extreme volatility, and most of this being sort of digital art. Nothing wrong with that. If I'm buying physical art, I want to get an NFT to authenticate it. And indeed, I did that for the first time a couple of weeks ago in New York when I bought a photograph from Udo, a famous fashion photographer there. He provided a full NFT and the making of the image and everything else that adds value to it for in perpetuity. So that piece of art will hang in Miami, and I'll have the ability to show people how it was created, regardless of what decade it is. So that matters. So I really see the challenge of the NFT market is it's almost impossible for the layman to mint an NFT. So difficult. And then understanding how the wallets, whether they be centralized or decentralized, work is impossible for the layman. So it's the use interface that is so difficult for the average person. And so we're a long, long way. And I would argue that the wallet business for just crypto altogether is, if crypto's in the third inning, the wallet hasn't even started the game yet. It's such a crappy vehicle in terms of security or ease of use or reporting or anything. So there's a lot of work to be done. And for when you go to these crypto conferences, even the Bitcoin conference, there's two universes. There's 10% of the people, 1 out of 10, are hardcore Kryptonians, if you want to call them that. And they're great. They were the founders of this industry, and they're still very adamant about how it should be, and their opinions matter. But 99%, the other $1 trillion, $5 trillion, $20 trillion worth of interest, are institutions looking from the outside in. And when you go to these conferences today, the majority of people are not investors yet. And so you realize what the great potential is, but also the roadblock of policy keeping us out of it. And I would say now the U.S. is falling behind. I think Canada's more advanced, United Arab Emirates, Switzerland, Australia, New Zealand, England, far more, mindful of the technology here and the use of it in financial services and the potential of it. So I think if we don't get some policy next year after the midterms, we're going to start to lag.
Is there any fear from either of you that the government goes too far and overregulates the industry and kind of ruins what this was really created for, to be a bit deregulated?
There's always that risk, but I don't see that, Crypto's not going away. Bitcoin's not going away. Ethereum's not going away. These projects are here to stay. They're well funded. There's a lot of use cases for them. I use USDC now corporately. We have a Circle account. We've gone through compliance and our auditors setting it up. I'm a shareholder of FTX. I'm a shareholder of Circle. I'm also, I should disclose, a paid spokesperson for FTX. I hold 32 different positions on my FTX account because it's the most compliant one I can find in working with my compliance department and my regulator. I do the same with BitBuy, which is, WonderFi. It's one of our divisions, and I've got a full corporate account there too, because these are compliant platforms. So I can be compliant in Canada on BitBuy. I can be compliant in the US on FTX. So you have to find your geography, figure out your compliant platform, and you have to hire a whole bunch of people to manage this stuff for you. So we're so early in all of this, but again, that's the potential. And I think that's what excites me about it. In our operating company, we have a weighting of 20% into crypto across all the different, owning shareholders we have, like WonderFi, like Mutable Holdings, like FTX, like Circle, and then the tokens and the coins themselves, like USDC and Bitcoin, Ethereum, Solana, HBAR, Paula, and Helium. I can go down the list. I own them all. And that's because I don't know with certainty which are going to work and which aren't.
Well, I'll say the same thing. I have my money in my mouth. There's about 20 to 25% of my portfolios in cryptos, but a basket, same thing, because I have no idea. I do the same thing when I buy stocks. If I like electric vehicles, I buy 6 of them because I don't know which one's going to come out on top. I definitely take the basket approach. Before I let you gentlemen go, I always ask, and you don't have to answer, but if I put you on an island, a really nice island, for the next 10 years, what's the one investment you want to take with you? You don't look at it for 10 years. You feel very comfortable owning it and not worry about it. And you come back 10 years and you're even richer than you are.
I would probably buy Bitcoin, just sit on it.
Ben, do you have one?
Yeah. I mean, my default answer is Bitcoin. I was trying to think if there was anything else that I would throw in there, but I think it's got to be Bitcoin.
Excellent. All right, gentlemen, I thank you so much for coming on. I really appreciate your time, both coming on at the same time. WonderFi, again, you trade on the TSX, Ben, exactly?
Yeah, we're on the TSX under the ticker Wonder, WNDR, and then in the States, OTC under the symbol WONDF. And we just submitted our NASDAQ applications, and we've got that in process to try and create better access for US and international investors.
Excellent. I think both you guys will be speaking at the Web3 Expo in Vegas, October 10th or 13th with me, I think, the same time at the Win. So I'll see you guys there. Maybe Bitcoin will be at 30,000 by then. Who the hell knows? Probably not, but we can talk about it if it is. So thank you so much for coming on. Kevin O'Leary, Mr. Wonderful, thank you so much. And Ben Samaroo, CEO of WonderFi, thank you so much for coming on. We'll see you guys again soon.
Thanks. Take care.
Take care. Thanks.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.